Hi traders, hope you are well. This is a coaching video for hidden divergence. We'll do some normal bullish and negative divergence as well, but it's always good to have a look at these things to see how they work in terms of price action. It's a fantastic way to make a lot of money. And if you've been following my Forex signals this week, we've had quite a few hidden divergence opportunities, and we've banked over 500 pips this week. So congratulations if you're in the gold signals service and you've been following those signals. Now, if you've got the price action charts, then this is part of the coaching. I've taken all the tools off that you don't need to know in this particular coaching video, but we're talking about divergence. And all the indicators and tools that we use are all leading indicators. So it's really important to understand that. So let's go through the video. So what I've got here in the chart, 5-minute chart on gold, I have the CCI, which is my most favored indicator, set at 20 on an SMA. It's very straightforward. I've also got a stochastic here. So these are momentum indicators and give us the heads up in terms of where the price is going next. So let me explain divergence, and in particular hidden divergence. And the reason why it's called hidden divergence is not easy to see. So this is the idea of this video. So here we are. So first of all, we have to understand market structure. We know that whenever the price is achieving, change that color, achieving higher lows, then we can expect the price to continue up into that area. If we're achieving lower highs, then we can expect the price to go down. Very straightforward, nothing complex about that. So this is the market structure, the price is going higher. But have a look at the CCI, how this has actually moved down opposite to all the price action. Now, as long as the price structure remains intact, what I mean by that is that the price does not go below this area, somewhere around there, then you can expect the price structure to remain intact in terms of bullish momentum. So here's the deal here. So this was one of the trades. When was this? Wednesday. So we put in a trade, a nice tight stop, and a nice target, 101 pips, 100 pips, let's say. So a fantastic risk to reward. That's the first thing. I'm going to change my candles to volume candles just so you can see it a bit better. So let's go back to where we were. Yep, so there we are. So for me, the better candles are volume candles. Or if you don't have that, then a normal candle is better because we're talking about price action. The Heikin-Ashi is very good for trending positions where you're holding a position for a long time because it hides all the noise. But we want to see the noise in price action scenarios. So once we see that the price is coming down into this area here, and we can see hidden divergence. Now, hidden divergence is a continuation pattern. In other words, it's going to continue up in this instance. And of course, then we get in. The other thing to note here on the stochastic is that this is oversold as well. There's also hidden divergence there, but it's very slight. It's not as obvious as the CCI. So that's an opportunity to get in. And this is also a continuation pattern as well, as the price continues to achieve lower lows on the indicator, the CCI. That's an opportunity there. See how it's come down, and it's also come down to oversold conditions on the RSI as well. So that's a perfect scenario where we had to wait a little while, didn't we? We had to wait a few hours, but that's fine. Another 98 pips. Congratulations to you. Here's another one. So you can do this all day long. I don't want you to be at your chart all day. Please don't do that. The whole point of being a successful professional trader is that it gives you time to spend with your friends and family. And that's really, really important. That's the reason I started this 30 years ago, is that it gives me more time with my friends and family, and I have all the time in the world. So just choose a time during the day, high volume time, London Open, New York Open, and spend an hour maybe on these charts once they set up. Again, higher highs being achieved on gold here. I've indicated by yellow lines, and we can see that the CCI is achieving lower lows, and again the stochastic is oversold. So there was another trading opportunity there, so we can simply put that on there. Bullish candle, nice tight stop, go for 100 pips, 3.45 to 1, etc. So let's go on. Let's get rid of some of these because that's history now. We've made that money. So again, another opportunity here as the price moves back down into support. We do have support areas and liquidity zones on the price action charts. I've not included those just so we can concentrate on divergence. And again, price comes in. We got a bullish candle. When was this? This was Wednesday. So the price went up. We banked another 102 pips. Nice risk to reward as well, which is the important thing, 2.87. Go for 2 times if you fancy that. That's fine. You can go for the big one, but you might want to look at the chart a little bit because the price may reverse for whatever reason, but 2 to 1 is fine. So a fantastic way to use the charts as the price achieves higher highs. This is bullish momentum, and the CCI comes down into oversold conditions, that's when you're likely to get a liquidity grab. And then we have our liquidity zones as well, don't we, on those charts. So let's have a look at a few more opportunities. Now this is normal negative divergent. We have the tool on the price action charts which tells us when we get negative divergence. That's automatic, but you can do it manually. It's not a problem. You just have a look at the CCI and it tells you anyway. Now in terms of the entry, for me, I wait for another pullback. So there's going to be a liquidity zone here somewhere. So it's going to be around here, isn't it? So there's going to be a liquidity zone here. So the price is achieving lower highs. We know that. We can see that. We've already got negative divergence. We can see that as well. And also on the RSI, stochastic, we can see this is achieving higher highs. So the CCI doesn't always pick up on higher highs. It's pretty much level there, isn't it? It's not so obvious. But if you see one of these indicators showing higher highs at this point, then you know that you can go into this price quite nicely with a 28 pip stop there and 107 pips or whatever it was target. So again, this is the opposite to the earlier ones where we had bullish momentum and the price was achieving higher highs, market structure, and then you come into the position once you get a bullish candle. And this is the opposite. So this is negative divergence, but confirmed by a pullback, and then hidden divergence. Change that color. So you can see that this hidden divergence is sort of rather like an elastic band winding up, is the way I see it. If you get in here at the bottom, you're going to feel the pain, potentially, that you're going to have a much wider stop to get into that, and your risk to reward won't be any good. But as we can see here, the price coming into this liquidity zone, and then the price rejected it completely and fell down with this negative hidden divergence. Again, the oscillator is achieving higher highs. yet the price action is achieving lower highs. And that's what you're looking for. It takes some practice. If you've not seen this before, it takes do a demo account and just go in and do it and just see if you spot it, because that's a fantastic way to trade. Oh, we had a trade here. Let's have a look what's going on here. Right, so we've got this situation here where we had divergence on the main upper time frame on the 30-minute chart. Let's have a look at the 30-minute chart. Not so clear here. So this is the bullish divergence I was talking about on, this is a 15-minute chart, but any chart will show you this in terms of the long term. So bullish momentum is highly likely to move up. As the price moves down, there's going to be a reaction, and we can go into the 5-minute chart, which shows us that reaction here. And there you have that target hit, 138 pips. As the, just look for engulfing candle. That's all you need, and then away the price goes. Let's go to the pound yen. So we're into the price action charts now, and particularly interested in divergence, positive, negative, and hidden. So this is the pound yen, and as you can see, we're talking about hidden divergence. As we can see, the oscillator, the CCI, is achieving lower lows, and yet the price is achieving higher highs. Just wait for a bullish candle. Let's have a look around. There we can see another one there. So again, price is achieving higher highs. Now you're going to have additional tools to help you confirm that it is an uptrend, but you don't particularly need those when you're talking about divergence, and that's subtle, but nonetheless it is achieving lower lows on the oscillator and higher highs on the price action. So this tells you in advance where the price is going. It's now come in like an elastic band, it's wound itself up, and then it goes up and up and up. Just make sure that you go for 2 to 1, and therefore you are likely to get much better success. There's another one there, and as you can see, the price is achieving higher highs. You're just waiting for the price on the CCI to come down. This is the 30-minute chart, which we use for entries, and you can just wait for the bullish candle to kick in. Engulfing candles are perfect. 2 to 1. Okay, so that is that one. See if we can see any more. They are much more common than you think. Ah, there's one there. Yep, just spotted it. So lower lows. Higher highs. So what this is doing, the market is doing, is actually trying to stop people out. So you'll be getting the sellers coming in at this point. You see a big red bullish, bearish candle. And of course, this is going to kid the market into going short. And the next thing they know, they get stopped out. So then you wonder why. So this is a nice move here. Go long on a bullish candle. Stop at the swing low. 2 to 1. Let's see if we can see any more. We can go on this forever, but nonetheless, it's a fantastic way to trade. Okay, bullish candle, there's a hammer there, and the price goes up. Divergence in terms of positive divergence. So this gives you a clue that the price is coming to the end of this move. This is automatically on your charts. If you've got the price action charts, this tells you in advance that the price is going up, and then you get the bullish divergence on the chart. Just wait for break of structure, swing low, 2 to 1. So hopefully you enjoyed this session. It's repeat it if you want to. If you not quite get it, then practice it. Put these onto your 30-minute chart and your 5-minute chart on gold and just practice. It really is a lovely way to trade and gives you fantastic opportunities throughout the day during high volume times. So good luck with that. And if you don't forget, if you've got any questions, then that's what I'm here for. We can get you funded very quickly and make you a lot of money at the same time.